Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, June 25th at about 1 p.m. Actually, it's 1:15 Eastern. The S&P 500 index hit an intraday record high again today, boosted by gains in Nike and bank stocks, while weaker than expected inflation data eased worries about a sudden tapering in stimulus by the Federal Reserve. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. We always look at this because this is the ETF that closely follows our benchmark S&P 500 index, and that index, of course, is the index we watch the most to kind of get a feeling of the market's mood and manner, whether it's going higher, lower, or even trading horizontally. Now, today when I captured this chart, the SPY was trading at a new all-time intraday high, above its closing high from June 10th at 423.61. Right now it's trading at 426.26, $426.26. So right back up and just a little bit past the prior all-time closing highs. Now, as we look at this chart, I think to myself, this is one mild-mannered chart. No matter what title the asset has, this is mild-mannered, but certainly very nice as it just keeps on moving higher, which is basically what the S&P 500 has done. As you can see, this chart goes back to the beginning of December 2020, and the SPY has moved up most of the time, staying above the green line, the 50-day moving average, and the red line, the 20-day moving average, which have both acted kind of as trend lines for the SPY. The 50-day especially has acted as just a near perfect trend line for our benchmark index. Now, we have talked the last couple of weeks about the energy that this move in March and April had. This particular upswing here, we can see that price came up, traded at premiums to the 50 and the 20-day moving average. Then gradually, as markets have to do, it did pull back to the 50-day line very, very nicely, moved up, came back, retested that low, and then started up again. Now, the last move in May wasn't quite so exuberant, which makes sense. A lot of times in the summer months, a lot of the big institutional traders take off for vacation, so we may not see the volume that we're used to seeing in the first part of the year. But we do note here that this particular move did not have the energy that the move did in March and April. So this past move in May, a little more subtle, a little more quiet. And now, of course, prices come down once again to the 50-day, dipped below it this time, but bounced right back up this week. And we had a nice move to the upside from the 50-day moving average at 418 and change. We've moved up just ever so nicely, and now again making new all-time highs. So this is good to see. It's nothing to complain about, that's for sure. Making new all-time highs never is anything to complain about. We just want to see here, the SPY has been moving up for quite a long time. We want to see if it can hold its somewhat, even quiet energy would be fine. We want to make sure it stays again above the 50-day moving average at 418 and even the 20-day moving average at 422. So we have new resistance here at 427, so that would be new resistance. We have support down here at those two averages I just talked about, 422 and 418. We have more support down here at 404 and some above it right here. Right here is 404. Actually, if I drew it in a perfectly straight line, that's where it would come out. So in the coming week, not a whole lot to moan and groan about here. Certainly it's very nice. In the coming week, we'll have to see if the SPY can stay above, again, the 20, in particular, the 50-day moving average. And as always, stay tuned and trade very, very wisely. Our next chart today is the Invesco QQQ, symbol QQQ, as you all know. This ETF represents the NASDAQ 100, which is a major index in the market. Of course, can always be called the market leader with the top momentum stocks like Apple, Amazon, Alphabet, Facebook, Netflix, that whole group. Now, when I captured this chart today, the QQQ, or the cubes as we call them sometimes, was trading at $349.40, also right at or near all-time highs. Yesterday, as you can see here, that little tiny doji on the chart, it made a new all-time closing high, very nice, at $349.89. So that was a new all-time closing high for the Qs. We did have on the Qs, the tech stocks made a very nice comeback in the last 2 weeks as they had pulled back a little in April and May. Made a very nice comeback in the last 2 weeks, of course, still trading at a premium to the 20-day and 50-day moving average. So we do have support. We have resistance here now. We'll call it 350. We have support here where this trend line's coming in at 346. And of course down at the 20-day at 340, the 50-day at 335. Now I've drawn an ever so gentle trend lines for a wedge you see coming in here. A wedge means that price is the lows are getting higher. That's a good thing. We want higher lows for an uptrend, but that the highs it's making, actually in this case the highs are a little higher. This line is coming up, so these lines are closing in together. But then in this past week, we had a breakout, so that's positive. The QQQ broke out here, so that's positive. We can also see down here, if we look at the 14-day RSI, that at the moment, the RSI line itself is bumping into this 70 line. Now we know that when the 70 line gets broken, the horizontal line gets broken by the RSI line itself, that many times we call this an overbought position. And so the Qs are getting, they're not quite, it's not over that line, but it's near it. So we could say the Qs are getting a little overbought here, which simply means that it may need to come down a little bit again to gather more steam to start higher again. So in the coming weeks, we'll keep an eye on the Qs and see if it can break higher from here. Could it make new highs in July? Market likes to go up before a holiday, remember that. Or if at some point here in the next couple of weeks, the techs need to pull into a rest stop. So either way, please be careful, trade wisely, and mind your stops. Our final chart today is a daily chart of the iShares U.S. Pharmaceuticals ETF, the IHE. The IHE has 47 holdings. The top components are Johnson & Johnson, Pfizer, Merck, all the usual suspects. Elanco Animal Health is in the top holdings. I thought I'd put that in, pretty interesting. And Lilly is in the top components of the IHE. And please know, and you probably know because it's been announced yesterday and today, Lilly may come out with an Alzheimer's drug in the next year or so. So the IHE is actually looking pretty good here. Now, it did make an all-time closing high recently of $189.57 on June 10th, right here. Price today is when it captured this chart, price was at $187.12, trading nicely above its 20-day moving average, coming in at 185 and change, its 50-day 183 and change, and its 200-day moving average down here at 176. Now, something I want you to think about here, if you want to close your eyes right now, you can. I wanted you to know that if you do take the time to look at, not right now, but in a few minutes when this is over, flip over to a monthly chart of the IHE. And if you do that, you'll see that from the year 2015 to about the middle of 2020, the IHE was actually trading in a range from about 129 to about 166. Then in August of 2020, the IHE started breaking out. Kind of interesting here. So now if you look left on this chart to the hard right edge, we start catching up with the IHE here in November of 2020. So you could say, if you could look more left on this chart, that it really was trading in a range for quite a while, and has been starting to break out again in about August of 2020. Now, looking again at our chart, November 2020, we can see that it was down at about 158 here when it started up. Then it quickly rose up straight up to a high here of about 176. Then it walked up its 20-day moving average up here to a January high of 188. So that was a very nice uptrend, walking up the 20-day moving average. As you can see here, the RSI at this point was above the 70 line, so we know that we're pushing our luck if we stay in it for a real long time here. And just so, the IHE came down, hit its 50-day, back up, couldn't make a higher high, fell down through all its moving averages in February. And then you can see where I drew trend lines here to show you a triangle breakout that it did in April. We made a March low here. I should have told you we made a March low here of 170, and then that's when this triangle pattern started forming with higher lows and lower highs. Then it broke out. But what I like here that I'm seeing, it broke out in April, pulled back, and is now walking up that 20-day moving average again. Of course, we're more concerned with the 50-day, with the trades that I make like this. But at any rate, now the price pattern is actually getting more orderly, and I like that. I like orderly price patterns. They're easier to gauge. So now the IHE, again, is trading at 187.12 right now. In the coming week. And by the way, this is not a day trading ETF. It doesn't have, this is a longer term. At least you want to go in with the idea of a longer term hold than that. In the coming week, if the IHE can stay above the 50-day moving average, the 20 would be nice, but if it can stay above the green line that's coming in at 183.46, if it can stay above the 50-day, and if the market behaves, meaning stays steadily higher or at least even or horizontal, I will add a small position to my trading portfolio. My initial stop is going to be down here at 183, right below the 50-day moving average. If and when the IHE can move up and over 190, up and over that prior resistance there, I will add to my position, and of course by then I will have in a trailing stop. So if the market remains strong, you may want to keep an eye on the IHE in the coming week. And now, before we go on to final thoughts, please know that if you'd like to become a more successful trader, this is a great time to check out my trader training programs. You're going to enjoy my powerful strategies devoted to swing trading, trend trading, bottom fishing, and many more. My programs are easy to understand. I make them that way on purpose because I know trading can be complicated, and they can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen or click on the orange button below. And now, on to final thoughts. Our question this week is, when I trade, do I plan my trade, enter at the opportune moment, and then remain patient for the trade to unfold over time, or do I enter, then move directly into feelings of impatience, silently urging the price to move up or down if you're headed short, and deliver a good result? Do we have feelings of impatience? Are we urging our trade to do what we want it to do? Now, please know that many traders are A personalities. We can be an anxious bunch, and we want everything to move forward the way it should, in our opinion, quickly and in an organized fashion. We push ahead no matter what stands in our way, determined to get where we're going and as fast as possible. We've heard the adjective impatient directed at us more than once. I certainly know I have. Moreover, as traders, we are used to assessing situations rapidly and then moving even faster. So it makes perfect sense that once we're in a trade, we're impatient for the stock's price to advance quickly higher, or if we're short, go lower, in a straight up move, or of course if we're short, straight down, because that's the way we want it to go. And you know what, guys, this attitude is especially true for short-term traders. Now, unfortunately, the market may have different ideas. She may decide to amble aimlessly for hours and days, and your stock may wander as well. Still, in most cases, if you've chosen well and there is no negative news issued on the company you're in and no negative news of importance hitting the market, and assuming your stock has not touched your protective stop, which of course you put in right after you enter the trade, most times it will serve you to wait it out. This, of course, is assuming you've researched your positions thoroughly and you're implementing your plan for each one. So strive for patience in trading. I can't tell you how many times I've gotten out of a trade for no particular reason except that it wasn't moving, only to see 20 minutes later, only to see it shooting higher, or only to see it the next day shoot much higher. So, hey, it happens to me, but I'm doing better on it, so join me. Strive for patience in your trading. It will make you a better trader, and you'll also take home bigger profits. Finally, please know that if you'd like to become a consistently winning trader, this is a great time to check out my trader training programs. To see all of my online programs, simply go to the link again on this screen or simply click on the orange button below. Have a great week. Keep green on your screen. I'm Toni Turner, and this is The Market Now.